Good evening, ladies and gentlemen. John Kelly for Options University on Wednesday, October 19th, 2011. Here is the disclaimer. Trading always has been, always will be risky. And risk is what it's all about. Do you know which way the market's going? The market doesn't even know which way it's going. A rumor came out in a British tabloid yesterday that the Economic Financial Security Fund, which they had just voted to raise to 400 million euros, was going to be increased to 2 trillion euros. On that news, the market rallied, which we're going to take a look at here very quickly. But today, the president of France, Mr. Sarkozy, said that they had reached an impasse and there was no agreement, and the Guardian article was bogus. Meanwhile, Spain received a 2-notch downgrade by Moody's. France has been warned of a potential downgrade of their AAA rating. And there's much talk about initially the Greek debt haircut that everybody was going to take was going to be 10%. Then it was raised to 20%. 60% plus now is what is being mentioned as what the cut that everybody's going to have to take in their financial position, all the Euro banks and all the private banks. The Troika came back from Greece, and although the official announcement's not there, Greece will not be able to meet any of its austerity goals ever. And in response to new austerity measures today, Greeks have staged a massive strike, and even the judges have gone on strike, and the people in the street throwing Molotov cocktails. There's a G20 meeting this Friday and Saturday. Talk of a plan to have a plan to be able to deal with all this. And then there's a meeting in Cannes, France, the 3rd and 4th of November, to possibly finalize anything. The only other news worldwide that came in was China's third quarter growth results were down only to 9.1%. Imagine if we got that here in this country, they'd be doing handstands and flipping. There would be no Occupy Wall Street. Everybody would be out working. But for China, that was the slowest growth rate since 2009. So what's that done to the markets? Well, if we look at the E-mini S&P, here was that 9-day rally we had. And here's Monday, Tuesday, and Wednesday. Monday, a dose of reality hit the market, and we went down. It became clearly evident to people that Greece was not going to be able to pay the debt. It wasn't going to be a 10-20% haircut, more like 60% plus, and maybe the contagion would spread like wildfire. The rumor in the Guardian came out in the afternoon, Monday, and in Tuesday we shot up. Today we were up until the impasse was announced by Sarkozy, and the air came out of the balloon and down we went. So far sideways, and this is the top of the 2-month range that we've been in at 1225. We came up and hit it like touching a live wire, went back from it like touching a live wire, fell back from it, and touching this. If this fails at any given period of time, the next move will be back to the bottom of the range down at 1068. But there's news to keep it from falling that far, which we'll see here in a second. The VIX. The VIX on Friday closed below the bottom of this range at 30, a very good sign that the market was finally going to straighten itself out and move up. But on Monday, with that down day, we had a nice 20% increase in the VIX. Yesterday, a mixed day, came down a couple of percent with that rally, but most of the fear trade stayed on. It got down below 30 and then came back up above it. And today, an 11% increase in the VIX. So that trade is on. But the news locally here, the PPI, the Producers Price Index, was up 0.8% versus the 2% they expected. This is an inflationary warning sign. On the good side, the housing number on Monday was up 28% to 18. This is the confidence of the builders, and as a result, building stocks were up. Housing starts came out today. They expected 595,000. They got 658,000. Best since April of 2010, which was the end of the tax credit program for buying a house. Empire Manufacturing, industrial production, utilization, all that was mostly unchanged Monday, Tuesday, and Wednesday. No news to really move the market there. On Monday, David Ihorn of the Ihorn hedge fund has about $8 billion, came out and said that Green Mountain Coffee wasn't going to make it and it was time to short it. And we'll look at that stock here in a minute and you'll see what that was all about. When you get $8 billion, you can create a little downside pressure on the stock. Apple's earnings came out on yesterday evening. First miss since 2003. We'll take a look at that in the gold member section. Lowe's announced that they are closing 20 stores. It gave a boost to the stock. Chevron Energy came out and announced a $5 billion stock buyback. What we're seeing is the companies are passing on the earnings. They're doing good and they have good guidance and they have a lot. They're flush with cash. What are you doing with the cash? They are not growing. They are not hiring new employees. They are buying back stock, which is bullish for the stock price if you're in it long term. And they are raising the dividend, or they're doing here BXP and STO a $4.4 billion buyout. It gives them access to the North Dakota oil fields. El Paso EB as a $38 billion merger with Kinder Morgan. And then stocks like Family Dollar are hitting all-time highs. And then you have other stocks like Whole Foods that are getting buy ratings, and stocks like First Solar that are hitting all-time lows. Earning news. So far, 7 out of 10 stocks are beating, and their guidance is positive. Apple had its miss, as you can see right here. First miss in 8 or 9 years. ISRG, Intuitive Surgical, which went on a tailspin over a year ago, now has been going to the top side for just about a year, 10 months. IBM, which had been going very strong, had it beat on the EPS, but the sales revenue was a slight miss, and they took it down and gave it about a 4% haircut. That was about a 5% haircut on Apple today, whereas ISRG, which we'll look at in the gold member section, had a huge gap up. VMware, after announcing a huge earnings beat, was down initially and then went contrarian with the market and went up. Intel, a huge beat and a move up also. Apollo Education, private education company, a big beat and a nice move to the upside. Finally, some good news from the financials. Bank of America, a big beat and moving up, and Goldman Sachs also moving up. If the move can be sustained, the markets can climb. If not, back into the doldrums. And this is Apple, and this is what we're going to be looking at in the gold member section.